So I suppose, Mark, good morning to you. There was an expectation that it might be single digit in terms of a drop next year. So is it worsening now?
Well, it's just double digits, just 10%, which is what NAB's prediction is for 2023, a 10% fall in property prices. But that's off the back of their renewed view on how many interest rate rises we should expect. So it all comes down to how many interest rate rises we're going to get in between September this year and 2023. But of course, the Reserve Bank has pretty much quashed everybody's view on how many rate rises we should have, other than saying, yes, we will look at interest rate rises in 2023. But the Reserve Bank has pretty much stood on top of everyone else and said, listen, we're in charge of rate rises around here. We'll tell you when the rate rises are going to happen and how much they're going to be. So your economists, you can do all your pitching and all your stuff to the media, etc. But we're going to tell a story. So they're the black, 10th Dan black belts when it comes to interest rates. That's the Reserve Bank. They're the only ones you should be listening to. Yeah.
Do you think that the Reserve Bank has made the right call? I mean, I think even Peter Costello has recently been critical of them. But the fact that they have been patient, that Philip Lowe has been patient, has that been the right decision in your view?
Well, so far so good. Australia's got a very low unemployment rate. Our inflation is pretty much in the sweet spot where they want it to be, between 2 and 3%. I'd have to say that, on reflection, the Reserve Bank's done a brilliant job. And they've taken us through the GFC, they've taken us through all the other stuff, the coronavirus, everything else. They've dropped interest rates. They were buying government bonds, etc. They were active in the market. They've pulled out of that. That's a big piece, by the way, that liquidity piece. The amount of liquidity that the Reserve Bank has been putting into the system over the coronavirus period, the last 2 years, has been quite significant. What we don't talk about is how much of that withdrawal is going to affect what's going on in the economy. So they have withdrawn their liquidity. In other words, they have stopped pumping money into the economy by buying government bonds, etc. So that's a big piece. All we ever talk about is interest rates. Interest rates, they're saying, let's just see what happens after we withdraw our liquidity. The Reserve Bank saying this, and then we'll work out what we're going to do with interest rates down the track. They have said that we probably will put interest rates up in 2023. But they're not saying we're going to rush into it in May this year or August, September, October, which is what the economists are saying, what the commentators are saying. Yeah, for sure. September, we're going to see 0.5%, 1/4%, then another 1/4% before the end of the year. I don't know. None of us know, by the way, but I think the Reserve Bank know what they're doing.
For sure, yeah, no, it's great but always better to be patient if you can. It's interesting though. I mean, this CBA news this morning, they've posted a huge profit, some 4.7 billion, and then our business reporter Ed Boyd, Mark, just put it down to the fact that it may well have a lot to do with the fact that a lot of people, a lot of investors, customers, I should say, are switching from variable to fixed in anticipation of rate rises, which now may not be coming. So maybe a lot of people have jumped the gun on that. Well, maybe some people will say that later on anyway. Now, while we're talking about, just before we go, properties expected to drop in Sydney, it's going the other way in Brisbane and Adelaide.
Yeah, Brisbane's been performing brilliantly. I mean, like Brisbane over the last 2 years, it's had like a 30% increase in prices. And when we talk about, price increases in Australia, we always talk on averages. Sydney and Melbourne have been a bit of a drag on the price, the national price numbers. Brisbane and Adelaide have been performing brilliantly. We don't get much data out of Perth, so I'm not sure about Perth, but unfortunately for Perth. But so we've got to be very careful about that. But the question is, has Brisbane run its course? And the other thing too is, has regional run its course? So regional were propping up the national averages too, and regional has done. In some regions, we've had better growth in those regions than we've had anywhere else in the whole country. So places like Ballina and Orange, and just to name 2 places in New South Wales, Ballarat and Victoria. So the question is going to be now that tourists are going to start coming back, rents are going to start going up in Sydney, people are being encouraged to go back to work in the city, back in the CBDs, both in Melbourne and Sydney and Brisbane. The question is going to be, will we start to get a fallback or a pullback from regional price growth? Will we start to get a pullback from people investing in Brisbane? A lot of people in Sydney invest in Brisbane just for investment purposes. They don't even go and see the joint. They just buy up there. Will we start to see some pullback and a bit more concentration of investing your money in places like Sydney and Melbourne into the CBD, or the more the closer to the CBD areas, because business will be back, so-called, back to normal, irrespective of interest rates. I reckon that's going to happen. I reckon we're going to start to see a slow movement back towards the more traditional markets and investing. That's in Sydney and in Melbourne.
Okay. Mark Bouris, good to chat as always. Have a good week. We'll talk to you soon.